CNBC-TV18.
Hello and welcome to your daily dose of the Startup Straight Show. I'm Ritu Singh and with me in the studio is Arundhati Ramanan. These are the top headlines that we're tracking today. Google pauses its payment policy for app developers after the Competition Commission's order. Developers can now use third-party billing systems for in-app purchases. Google says it is reviewing its legal options.
I'm truly sorry, says the founder of edtech company Byju's in a letter to employees after laying off 2,500 people. Adds there is a huge price to pay for walking on this path to profitability.
The funding winter has led to a 61% drop in hiring by startups, according to a new study. 15% of companies are shifting to a partial gig workforce model, and payments to these gig workers are up 153% amid the slowdown in hiring of permanent employees.
Elon Musk fires the Twitter board, becomes the sole director days after buying the social media company. Later tweets that the arrangement would be temporary, also proposes to charge a monthly subscription fee of $8 in a Twitter exchange with author Stephen King.
Uber beats top-line estimates for the September quarter with a 72% jump in revenues to nearly $8.5 billion, records the best-ever adjusted EBITDA of $560 million, but reports another billion-dollar quarterly loss.
Nykaa reports a consolidated net profit of over 5 crore rupees for the second quarter of this fiscal. This is a 330% jump if compared to the same quarter last year. Revenues came in at 1,200 crore rupees, a 39% higher year-on-year increase.
Clean cosmetics brand Lotus Herbals makes its fifth strategic investment in 2 years, picks up a 20% stake in Yogic Secrets to help the nutraceutical brand expand across US, UK, Australia and other international markets.
Well, those were the headlines that we're tracking for you this evening. But on what's brewing today, less than a week after the Competition Commission imposed a back-to-back fine on Google, the company has decided to pause its payments policy for all app developers. This will lead to developers using third-party billing systems for in-app purchases for now. Shilpa Ranipeta joins us now with the latest. Shilpa, what does this mean for Google?
Well, Google said in an update on its support page that it will now pause the enforcement that requires all app developers to use Google Play's billing system. Now, this is following the CCI order, but remember, this is only a pause now as Google reviews its legal options post the CCI order. It is also only in India. The requirement continues in other markets outside of India. Now, remember, this enforcement was set to come into effect today after Google announced in October 2020 that all developers selling digital goods and services on their apps are required to use Google Play's billing system, and the apps using an alternative in-app billing system will need to remove it and comply with the payment policy of Google. Now, this was then delayed to 31st of March of this year globally following backlash, and in India, Google had delayed that till the 31st, saying that it wanted to offer required support for recurring payments through systems like UPI and wallets, and also in the light of changes that were coming into India's recurring digital payment guidelines. Now, remember, this move, though not clear yet whether it's permanent change or not, is a shot in the arm for India's app developers and the startup founders, including the likes of Paytm's Vijay Shekhar Sharma, who have been speaking up against Google Store's policies and the commissions that Google charges on all the transactions that happen on an app. But remember, the CCI's order only directs Google not to force its own billing system and allow other payment gateways, and this does not impact in any way the commissions that Google charges on transactions.
All right, Shilpa, we'll leave it at that. Thanks very much for joining in. Now, online gaming industry is waiting to have a detailed regulatory framework and some clarity on taxation from the GST Council for better operations. Industry player Games 24/7's co-founder and co-CEO Bhavan Pandya, in an exclusive interaction with Timsy Jaipuria, talked about the current challenges being faced by the industry and future plans of the company. He also talked about the new 400 crore rupee venture fund for budding entrepreneurs. Listen in.
Right now, we need regulation, and two, we need clarity on taxation. Those are the two biggest challenges.
You were part of the representing industry, especially when it comes to the GST Council, on online gaming, casinos and horse racing. You also came up with a detailed presentation to the group of ministers. What was the presentation all about? If you could crisply talk about, is 28% acceptable to your industry or not?
Sure. It all comes down to what the valuation is on which the 28% is going to be levied. Currently, we pay 18% on the revenue that we generate from providing this service, right? On that, we are welcoming the 28%. That itself will be 60% more tax than we're paying right now, but we welcome that. We are okay with that. Right? But if the valuation is going to change, so if they're going to levy the tax 28% on the entire entry fee, that is the amount that I'm paying for, that will make it unviable for the industry.
What was the assurance that you got from the group of ministers?
The assurance we got from the group of ministers is that they have no intention to disrupt the industry or to negatively impact the industry. So they are giving us a very, very open hearing and are going to come out with the best possible solution, is what we've been informed.
So you're waiting for the GST Council to actually come up with its final report and decision on taxation?
We are.
Apart from that, other areas which are challenging is the regulatory framework. METI is the parent industry ministry, to be precise, for your sector. You are making representations to them as well. When it comes to what should be the regulation, how should the companies situated in India and how companies which are abroad, or to be precise, onshore and offshore companies, what are their challenges?
So the challenge that we face right now, as far as regulation is concerned, is that we would like clarity in terms of what we can do and what we cannot do. And you mentioned METI, but I would like to say that generally the government has been very open to listen to us and to actually come up with the right kind of regulation. So we are working with them actively to let them know or to share with them what we have learned is happening in India and in other geographies. As far as offshore players are concerned, I think the issue is that they're offering games that may or may not be allowed in India, which is the main point, that if the METI or the government is going to tell us, okay, these kinds of games are allowed, that puts us in a much better place to be able to operate in India.
So you're waiting for that regulation to come?
Yes.
When it comes to consumer protection, that is also one area where government is working. Consumer Affairs Department is in touch with the online gaming industry in terms of avoiding people to get into the trap of, say, illegal loan apps, illegal betting apps, which are also thriving along with the industry.
Yes, that's right. So to answer that question, you're absolutely right. What is happening is that this industry, the industry that is in India, the online gaming industry, I'm very happy to share that has come together extremely well to recognize some of those problems and also fight them. So I can tell you about us at Games 24/7. We are ensuring that we are tracking our players to understand, right, what is engaging them, what they're doing well, what they can do better on. And so in the cases where we think that they may be playing more than they should, we're very quick to stop them. And I'm also happy to share with you that we're not the only ones that are doing this. The industry is coming together because they recognize these as problems and is working towards solving them through their data and through some of the technologies that they've put in place. Where we've obviously done a lot of work on data science, AI, machine learning, and a lot of time and efforts have been invested there to really build world-class systems that can help us cater to our players better. We've just announced Games 24/7 Ventures, a fund that we're starting, which is going to invest in entrepreneurs, budding entrepreneurs, in the digital online gaming, digital content, digital marketing space, to be able to give them, obviously help them grow through our knowledge and through some funds.
What is the size of this fund?
It's over 400 crores to be invested over 5 years.
And what are the potential areas which you're looking at as immediate where you can start investing this fund?
Yeah. So the area that we know very well is online gaming. So that's obviously going to be a key area for us. But then there is also digital content. What are the different kinds of contents that will engage people, different kinds of casual games that are there?
What are these contents like? What would be the sectors of these digital content? We speak of digital content as a very large term nowadays.
100% right, and good question. When we talk about digital content, we talk about entertainment. So different games that that you can offer people, but that are very casual in nature. That you come for 5-10 minutes, you play them, you go away, you come back and play them. So casual games mainly is what we are referring to for the global market. So made in India for the world. So that's something that we are doing and we want to invest in. But in addition to that, there's also digital advertising that we've learned a thing or two about, where we think that there are synergies with us where we can invest. And then there is, esports, some of those other areas in gaming as well, where we want to get involved.
Moving on, RBI's digital currency has arrived and sources say 9 banks participated in the pilot that kicked off today. The central bank-backed digital rupee was used to settle trades in government bonds worth 275 crore rupees. Now, the State Bank of India, Bank of Baroda, Union Bank were the public sector banks that participated in the pilot. HDFC Bank, ICICI Bank, Kotak, IDFC and Yes Bank were the private banks. HSBC was the only foreign bank participating in the trade.
Well, the startup ecosystem in other news has seen massive shifts in hiring patterns over the last year. A study by RazorPay Payroll, the business banking platform of RazorPay, has found, and this is based on payroll data of 25,000 plus employees across 1,000 or more startups. Now, this study finds that hiring of new permanent employees dropped by 61% over the last year, with CXO hiring seeing a massive 93% drop. Gig workers seem to be the preferred way to go for startups, where payments to gig workers have also seen a growth of 153% since October last year, and the number of enterprises that have shifted to a semi-gig workforce model that has also increased by 15%. Joining me now to discuss this report and its findings is Shashank Kumar, the MD and co-founder of RazorPay. Shashank, welcome on the show and thank you for your time. If I could start by asking you the broad takeaways in just a few lines, if you could summarize for us of the study that you've done.
Hey, Ray, hi. Thanks for welcoming me on the show. I think the study that we have done around payroll data for last 1 year is really, really interesting and talks about, the health of the startup ecosystem and how a post-COVID environment and the funding winter is impacting, startups in all the different sectors, right? So first of all, I think we have seen 61% decrease in new employee hiring, right? Which talks about how companies are holding back in, giving out new offers. But at the same time, a lot of companies had built out their workforce on the back of the COVID growth and tackling that growth. And that as that growth has gotten normalized, now we are seeing that, while the salary payouts has still increased year on year, but it's not at the same proportion as what it used to be. Secondly, I think secondly, I would talk about how a lot of more companies are preferring, gig workers and contract workers, because that is being seen as a cheaper form of, hiring, and also for a lot of low-skilled jobs, I think that's becoming a more preferred choice for a variety of startups, in the sector.
But Shashank, is there light at the end of the tunnel? You're talking about this great normalization in hiring. A blip because of the current funding winter that we're seeing and the mass layoff news that we've, of course, been seeing across companies?
I actually think that, after 3 to 6 months, we'll see some of these trends picking up back again as companies adjust to, funding not being available on tap and living with the reality of, building out more sustainable businesses, at least in the short term, right? Rather than just relying on, funding coming through. So I think it's overall okay for the startup ecosystem. You go through these ups and downs, and the startups which will do well are the ones which can adapt to these dynamic environment and still come out on the other side in a really strong way.
Shashank, I thought it was quite interesting that you said almost 15% of the organization said that they're moving towards a semi-gig workforce hiring trend. But the pay for them, while your report says it's increased by about 153%, we still hear about, the unfair contracts handed out to them, and perhaps, is that number a bit skewed? Are there extremes even in this pay range that we see for gig workers?
Yeah, I think there is a lot of skew. The majority of contract workers are still on the lower cost side. And what I see is that, a lot of, permanent employees, right, those roles are now going to more contract workers. But at the same time, on the higher end as well, where, you would hire a senior leader for the job, you are seeing hiring of a lot more consultants or people who have been there in the industry, and the companies can't afford them fully, but, definitely want to utilize their services. Right, so that's the a major shift that we are seeing. I think it also reflects the maturity of the ecosystem, right? Because while there's this sense that we need to always have a permanent job, at least for the senior folks who are very sure of their skill set, I think they believe that they can do better in some of these environments in a contractual role instead of doing a full time.
And what is the trend you've observed with salaries for non-gig workers? And I'm talking about the permanent workers here. You said there was a slowish rise, about 12%. Which are the sectors that are able to pay more? Which are the sectors that have paid the least? What are the trends you observed in salary payments?
So I think broadly, I think this is impacting all the sectors in uneven ways. Like I would say, fintech overall is faring better, right? Some of the gaming companies have done better over time. So there are sectors which have done better, but I think this is a trend which is present across all the sectors. At the same time, I think technology is the department which is the least impacted, right? Because that's where there we have seen a decrease of just 4% compared to other departments that are there. That talks about the supply-demand gap of good engineers, good technology people in the ecosystem, and also that most companies are still very hesitant to pull back investments in developing their new products or R&D because I believe everyone feels that it will impact their both short-term and long-term growth, and that's not something that they can compromise on. It takes a long time, by the way, to build out the engineering team compared to some of the other departments, because most startups are very technology first, and that is why that will be the last sector to get last department to get impacted.
Okay, tech clearly will be the last department to get impacted. But, in terms of gender parity, again, we continue to see this play out among startups as well. Surprising, these are newer companies. One would expect, you'd see more parity between genders when it comes to pay, when it comes to hiring. But Shashank, that's not the case.
Absolutely. I think we continue to see that case. I think there's still significant gap between the gender, hiring as well as the salaries paid out to both, males and females. We are still seeing that the median salary gap between men and women was close to 46%, in the last year, right? And as we go to higher salary brackets, at the 95th percentile, there is a whooping 70% difference between, in the salaries between the two genders. I think this also reflects the fact that, women still make, a larger percentage of the junior workforce versus the senior leadership and the mid-level managers. I think we still see a majority gap there in terms of, growth of women and promotion of women overall in the industry. And I think that trend has been present, throughout last decade as well.
Shashank, we've completely run out of time. In just one line, what about Razorpay? How has your hiring and salary payment increased over the last year? Just quickly, final word.
Yeah, so I think our salary payment has increased almost by 13% in last 1 year. Okay. We haven't done any layoffs, or we don't plan to do any layoffs, but we have also slowed down new hiring given the macro environment and taking the overall picture into account. But overall, for us, we are still very healthy, financially, and we are still looking to expand internationally in offline payments and in multiple other areas.
All right, Shashank, we'll leave it at that. Thanks very much for your time here. It was a pleasure speaking with you. Thanks
a lot, Ria.
On that note, it is time for us to head into a short break. But coming up next, B2B building materials startup Global Fair raised $20 million recently. A special conversation with Shelley Garg, the CEO of Global Fair, to know about their growth plans. Stay tuned.
Welcome back. Now, Baiju Ravindran, the founder of Byju's, has written a letter to employees after announcing more than 2,500 of them are going to be laid off. The EdTech company posted losses of more than 4,500 crore rupees, and as part of a restructuring plan, it has promised to turn profitable by March next year. Mannat Chuk and Arundhati Ramanan bring you this report.
Nearly 3 weeks ago, EdTech unicorn Byju's announced plans to lay off 2,500 employees in a phased manner driven by their intent to achieve overall profitability by March next year. Now, the founder and CEO Baiju Ravindran has sought forgiveness of these 2,500 employees that make up around 5% of the company's 50,000-strong workforce. He says, and I quote, "I am truly sorry to those who will have to leave Byju's. You are not just a name to me. You are not a number. You are not just 5% of my company. You are 5% of me." He calls the move a huge price to pay for the path to profitability, and while he says that it breaks his heart, he tries to explain. Baiju's rapid growth over the past 4 years has created some inefficiencies and redundancies within the organization, which they now seek to remove with this massive round of layoffs. The series of layoffs by Baiju's has also drawn the attention of the government in Kerala. After the company ceased operations in Trivandrum recently, causing employees to resign, Kerala's Education and Labour Minister said that the government will conduct a serious probe into the matter. That's not all. In Bengaluru, employee unions have accused Baiju's of forcing resignations and engaging in unfair labour practices. The company denies the allegations. But Baiju Ravindran promises to make amends. The layoffs come with an exit package, medical insurance for the family, fast-track full and final settlement, and a promise to prioritize bringing the fired employees back when the time is right. But as of now, he says, sometimes what Baiju wants is not what Baiju's demands. In Mumbai with Manat Chugh, Arundhati Ramanan. So that's the latest on the Baiju's front. But moving on, B2B building materials startup Global Fair has raised $20 million in a mix of equity and debt recently. The Series A fundraise was led by Lightspeed and saw participation from Sama Capital, India Quotient, AUM Ventures and Stride Ventures Global. Global Fair will use the fresh funds to grow its team, scale business and build new products. It also aims to strengthen its manufacturing base across India and Vietnam and launch capital finance solutions. Joining us now to discuss the company's growth plan is Shaily Garg, the CEO of Global Fair. Shaily, thank you so much for joining us on the show. As I said, you've raised these funds in a mix of equity and debt. Can you tell us how much was equity and how much debt? What was the rationale to take the debt route?
So thank you so much, first of all, for having me on the show. So it's a healthy mix of equity and debt, and the nature of our business has a significant amount of working capital along with, the entire unit economics that play out. So for us, both equity and debt make sense to power through growth and, support the working capital needs that are there.
All right, so a healthy mix of equity and debt. Now you essentially solve manufacturing and procurement problems for the building materials industry across the US. So can you take me through the pain point that you're trying to solve for?
Yeah, perfect. So in US, what we're trying to become is a one-stop shop for building materials for, big contractors, fabricators across, in entire US, effectively Western market overall. And in which, so imagine everything that is there inside four walls, which is, finishes or semi-finishes, which includes counter, cabinets, flooring, sanitary, LED lights, everything packaged together as a single, install, especially in the time when there is humongous labor shortage in US. So everything packaged together, delivered to their doorsteps, just like Amazon for, B2B building materials. While towards the supply side, we are trying to bring that manufacturing uplift. We become the access to that high quality global demand of building materials more towards finished. Yeah.
All right. So you've raised 20 million. Now, what do you plan to do with the funds? You're going to grow your team, scale your business. So take me through how you're going to allocate these funds.
Yeah, so we are going to be deepening our tech offering. We are going to be expanding our supply bases. We are currently present in India and Vietnam, so we want to expand to Malaysia next. We would be expanding our team to a massive scale all across India, US, and Vietnam.
All right. Now, take us through the solutions that you have on offer. You said you're going to deepen your tech services. So what are the things that you have on offer and how many categories are you planning to expand into? What's in the pipeline for you?
Yeah, so we are currently into 4 categories. We are into cabinets, countertops, sanitary, and flooring. We want to expand to doors and windows next, and fencing, thereafter. The idea is to own the entire, finishes inside 4 walls. In terms of tech, a customer starts interacting with our tech platform. This is a very, very conventional industry, right? In which everything still used to happen on phones, and, there is zero reliability and transparency in the mix in supply chain. So a customer starts interacting with our platform right from architectural bidding platform to, final delivery of the material, everything tracked, in real time for him on what's coming, what's being manufactured, what's being produced, QC of it, payment, entire delivery, and then feedback ecosystem as well. So that's on the customer side, while on the manufacturers and internal side, there is a 3-way integrated platform, which helps supplier also, optimize cost and production efficiencies through demand planning models that we have in place. And internally, everything from discovery to final delivery and then payment is taken care on our own internal ERP.
All right. Now, you claim to have grown 300% on a yearly basis over the last 1.5 years. Take us through the revenues you've clocked this year. Where will you end this year? What are the targets you've set for yourself?
So this year we are going to be, as we started last year, January, so this year we are going to be closing around 300x of where we were last year, especially across. So we are present in 36 states in US right now, with 4 states being very, very prime market for us. For this year, our target is to pick up that one micro market and be the leaders in that micro market in terms of at least occupy 10% market share of Texas to start off with.
Okay, all right. So like you just mentioned, you've expanded across 36 states in the US, and you procure and manufacture your materials from India and Vietnam. What's the expansion plan going forward? Are you exploring other geographies, or will the focus remain on these? You did mention Malaysia, so anything apart from that? What have the challenges also been in making this process seamless?
Yeah. So the next ideal market, the idea is to expand all across Southeast Asia, because there's a humongous China plus one, and Vietnam, India, entire Southeast Asian belt is one of the biggest opportunities for that shift of that China plus one manufacturing, right? So our next immediate targets are Malaysia. Then we want to expand to Cambodia or Indonesia, right? So that's in plan. In terms of how do we plan to expand categories, or how do we plan to or what are the challenges, for example, in creating this ecosystem was, so this is a very, very conventional industry still, right? So technology adoption is something that, to our surprise, had been very, very amazing, from our customer base, but still remains a challenge in terms of, explaining it to someone sitting in construction for around 30-35 years doing business a certain way. Hence, our tech is extremely adaptable, very, very easy, still, gets that value added to the customer. So you have that in-bind, in customer to adopt the tech.
All right, Shaili, thank you so much for joining us on the show, and we wish you all the best going forward.
Thank you so much for having me. Bye-bye. Thanks a lot.
All right, that is all we had today on Startup Spree. Thank you for watching. It's a goodbye from all of us, but stay with CNBC-TV18. The news continues.